why this is an incredible time to invest in multifamily. Both of us, Anna and me, we truly, truly believe that 2024 is going to go down as one of the best entry points into the apartment market for a very long time. Let's talk about why we believe that. Firstly, we know, along with everyone else, that the Federal Reserve is now done with their rate hikes. Now the focus is on the exact date when the rates are going to start going down. And our bet is that the first rate cut will come in March or in April. What's exciting to us is that even though everyone knows this, the market's still factoring in today's extremely high interest rates when setting prices. The sellers, they've adjusted to a new lower priced world, and buyers, they still have to deal with the high interest rates in the coming months. So they're asking for huge discounts. And we all know that these discounts can't last. So savvy investors are very focused on taking advantage of this short window. And another reason to buy today is the amazing strength of the US economy. The economy has been far more resilient than any analyst's prediction from a year ago, including ours, by the way. Wage growth has now finally surpassed inflation, growing faster than inflation. So buying power is increasing again. And that means rents can be raised. Yet another reason to buy today is that even though interest rates are high, there are still some properties, some available with assumable fixed rate loans. So you get the discounts, but you don't have to deal with the reason for those discounts, the high interest rates. So best of both worlds. And the final reason is all about this chart. The resilience of single family home prices means that the monthly mortgage here in orange now exceeds the monthly median rent by more than 50%, more than 50%, right? It's almost double. The biggest gap in history. For most markets in the US, it absolutely makes no sense to buy. It makes perfect sense to rent. Here, by the way, are the rate cut expectations for 2024 from different analysts. I think the slide speaks for itself. The range is fairly wide. On the left, Wells Fargo and TD America think the Fed could go nuts. They could cut as much as 225 basis points or 2.25%. On the other end, there's a few that believe that we might only get 50 to 75 basis points of cuts this year. The average rate cut prediction is 130 basis points or 1.3%. And believe us, we would be very happy with that average because a 1.3% change in rates would give a tremendous boost to apartment prices 1 year from now, which is why we want to buy as much as possible in the coming months. Now, you can see on the right that the economy is supporting continued price growth and rent growth. Now, we added over 200,000 jobs in December, and you can see that inflation is declining. Look at this sharp decline here in orange, but the unemployment rate is still, after 18 months of rent hikes or rate hikes, is still at a record low of 3.7% today. And what this chart is showing that after 2.5 years, where inflation was running faster than wage growth, so you have less money in your pocket, that situation has now reversed. And wages are again growing faster than inflation, which is allowing us to raise rents. The bottom line is this. Inflation's falling, rates have peaked, and we have very strong discounts in the market today. And this is why we believe that the first half of 2024 is an outstanding and short window to buy multifamily at amazing prices. And that's why we're so excited about Midtown Ridge.